you believe me, but if I mean to show you, I will never. Oh, here you are, face to face in this trashy bar. Another glass and I am going places. Makes me laugh about the irony of everything. I like the way you're thinking. I don't really care about the music on the dance floor. I don't really mind all the smokers in the bathroom. I don't care at all, baby. You got my attention. So you were saying, oh no, I don't see the logic of things. It's quite a lonely world that we're living in. Oh baby, you are something special, I'm sure. Everything makes total sense when you're next to me. Adventure times. Another drink and I'll go anywhere. The way you smell, like a flash in the universe. You are illuminating. I don't really care about the people in the bar line. I don't really mind all the who goes doing stage dives. I don't care at all, baby. You got my attention. So you were saying, I don't see the logic of things. It's quite a lonely world that we're living in. Oh baby, you are something special, I'm sure. Everything makes total sense when you're next to me. Even if I told you I could never let you go, I'm not so sure you believe me. But if I mean to show you, I will never let you go. No, 'cause you don't see the logic of things. It's quite a lonely world that we're living in. Oh baby, you are something special, I'm sure. Everything makes total sense when you're next to me.
City of mine, how I love the city of mine. It never gets me down.
What's up, good people? We are about to get it started here. Welcome to the live stream. Thought I would jump on and just let's talk about what happened. You know, I dropped a video about Fed Powell and the whole speech coming out. And we said one of two things was going to happen. And basically, one of two of those things happened. So we're going to take a look at that and see what's up. Financial Freedom in the house saying, thanks for the update, Coach. Good to see you outside of the awesome PTU community. We are going to be going live inside the private community right after this to break down the trades. So be sure to join that one. I just sent out a text message. Marquavius is in the building. What's going on, sir? Just got back from traveling, and I thought, let's go live. Let's talk about what's going on in the market. My girl, Tiffany Griffin, where you at? Bam, there she go. Look at that headshot. Ooh, Tell the fellas step their game up. They still got like a letter or a logo as their face. But anyway, all right, let's get into it, guys. Or should I say guys and girls, because we got the ladies in the building too. Charlene, May, good to see you here with us. So let's talk about it. Fed Powell came out. He spoke, and the market spoke back. Okay, so let's take a look at what happened. As the market spoke back, they like, okay, Powell spoke, well, we gonna speak too. All right. So let's take a look here at what we got going on. All right. So couple things happened. You can see we sold off pretty decently. When we were first looking at this, we said, well, maybe this level would hold. That was the whole thought process, is that, all right, we already had this sell-off because of the CPI data. So CPI came out, data was bad, or inflation, whatever, and then inflation was higher than expected. And so then we got that sell-off. So I'm like, then we kind of rolled all the way down here, and we were sitting right here before Powell gave his speech. My thought was one of two things. I said, number one, perhaps we already got the sell-off because of CPI, and we already expected a 75 basis point raise, but it was going to all depend on what Fed Powell said after he did the raise, because we already baked in the fact that we were going to get the raise. However, the 75 basis point raise, we got the raise, and the market has spoken. And so let me make these candlesticks a little bit bigger so you can just really see the market gave its analysis. Stocks ran up and then just got murdered. Not only did they get murdered, they just closed at the absolute bottom for the day. Didn't turn back around, didn't look back and say, hey, wait for me. None of that. Now, take a look at today, because at first I'm like, well, that might have been the maximum power of the bears. At least that's what I thought. Today, we gap down, we sell off again, but look at this. Almost equal, just not slightly better, but equal selling volume. So I don't know that the bears are done. But here's the tricky part about trading, right? If you're investing, that's different. You just buy stuff and wait forever. Trading, though, you're all about getting involved with the patterns and buying at the best time, selling at the best time. So if you look big picture, the overall market is in a downtrend, okay? And so if we look at it like this, there's two different ways you can look at it. You can look at it and draw your second line, something about like this, or you could kind of stretch it out to here. I like to hit as many points as possible. So I want to give you a couple different points of views. First point of view is, if we didn't bounce right here, we're kind of still in the area where we can bounce, but I don't think we're going to get the bounce. I think the next leg goes lower, and possibly we hit this downtrend in support. But here's the thing. It won't just drop like a rock probably. We got this level to break through. We have this level to break through. And if we break through both of those, the next logical place is going to be right here before I would feel good about going bullish on the market, because, well, that's quite frankly what we've had before. And so I still think there's more downside to go based on the technical analysis. I think there's more downside to go. Now, let's bring in a little bit of fundamentals to this game as well, or should I say the practicals, all right? We got to think about what's going on here. And by the way, debt-free dad, welcome to the party. We got to think about what's going on here. So Fed Powell, there's a couple things that he said that could be quite concerning, could be a little bit concerning. One of the things that he said was, well, he said some things that were positive and he said some things that were concerning. So I think you got to be prepared to get rich long term. And I think you got to also be prepared to run up some cash and take some profits short term to the downside. So here's my thoughts on what he said and why I think some was positive, some was negative. He said we want to get to a Fed's fund rate where basically we're basically done raising the interest rate. We're not there yet, is what he said. Okay, so then that's whole bad news, good news. So he's like, yeah, and at that point we're going to become data dependent, or we'll see what happens, and we won't necessarily keep raising. So he kind of signaled like, okay, this will be over soon, maybe early 2023. But here comes the bad news. But he said this year, he was like, probably there's at least about another 125 basis point. I believe that's what he said. Don't quote me on that. I think he said 125, not 150. 125 basis point baked in this year. So I'm like, okay, this year is September, almost the end of September. That means they're going to raise 2 more times before the end of this year is out. That means we got another raise coming, what, October or November? And then they're going to raise again in December. So I'm like, they got to raise 75 and 50 or 1 basis point and 25. Doesn't matter. You got to think about what that means in the context of your spending power. Okay, that means whatever interest rates you're seeing for houses most likely are going to go even higher. So most people won't be buying houses, but then most people won't be moving out of their house because they don't want to move into a new mortgage if their house isn't paid off. They don't want to move into a new mortgage at that higher percentage rate. So it's going to be a stalemate in real estate. Now, if you're not thinking about this stuff in terms of, by the way, it's been a long time since I said text me. If y'all follow me, shoot me a text. Let me know how you like this stuff. Or if you got some questions for me directly, shoot me a text. We got about 6 minutes before I have to jump off and we got to do our session with our members. But here's how I want you to think about this stuff, guys. Sometimes we think like, why is this a bad thing that people can't buy houses? That's just one portion that's affected. You could also argue that cars are going to be affected as well because people finance cars. Most people don't just walk in like, let me get $100,000 Cadillac Escalade. They don't usually walk in and say, let me just drop 50 grand cash on a Mercedes Benz or, a Ford Focus. Whatever the car is, the average person finances the car. So you got to think about what this means now. As interest rates go up, the average person is going to think either twice about getting that car or may not be able to afford that car. Now you're like, well, what's the problem? They just go keep catching the bus. That could be a problem. They can just keep catching the bus. True. But you got to think about it from this standpoint. If they buy that car because they just have to have it, that is less money that they have to spend other places. That's less money they can spend on an iPhone, less money they can spend on vacation, trips, less money they can spend on Air Jordans or shoes or Prada purses, whatever. So you can see how this starts to have a rippling effect into the economy. Now, if they can't get the car, if they get the car they want, they got to cut back on other things because it costs more money out of pocket to get that car because it's a higher interest rate. So they stop buying some of the other stuff. The other side of that equation is they say, I'm not going to get a car. I'll just keep carpooling or walking or catching the bus. Well, then that's going to slow down auto sales. Well, if that slows down auto sales, or if they buy the car, it slows down them spending money in other areas. So some areas going to get slowed down one way or another. So what happens then? The auto industry starts to say, well, maybe we don't need as many workers right now because, sales are down and they're going to be down for the foreseeable future. Let's lay some people off. We lay some people off. That's less people that have money again. That's less people willing to go out and buy stuff. Now, from the Fed's perspective, that's good news because the less people that can buy stuff, we can bring inflation down because there's less demand. And then we can kind of catch up with supply chain and all this, that, and the third. So it's almost like they're saying, like, we need some of y'all to basically not be able to afford stuff. Or if you go buy it anyway, we go hit your pocket so you can't afford the other stuff. And anybody who has a job, we kind of need some of y'all to get laid off. I mean, that's basically what my man Jerome just, hey, where the horn? If you asleep at the wheel, that's what my man Fed Powell just basically told you. I need some of y'all to lose your job. I need some of y'all to not be able to afford this stuff. Then we can get things in alignment. Now, he doesn't really want that to happen, but it's like the cost of doing war, right? You like a casualty of war. And sometimes in war, good people get hurt. Now, let's go back to the real estate example. If you think about real estate, you got less people more people don't want to sell their house because they don't want to roll into a new mortgage. You also have new home buyers who can't really afford houses now because the interest rates are not just back to regular rates, but we're going higher than regular rates. It used to be like 4%, 5%. Now we're getting back to perhaps 6 or maybe higher percent. So here's what happens. If you aren't moving out of your house because you don't want a new mortgage, if these people aren't buying a house because they don't want to pay as much for a new mortgage, what starts to happen? Let's take a look at the chart. And here's what starts to happen is that another industry is now affected. So think about all the realtors who make their money from selling houses. Well, if nobody's moving and a whole new class of people can't afford houses, what do we have all of a sudden again? We have another group of people who are making less money, which means they have less money to spend because they're not selling as many houses. And so you're going to see a natural progression and drop in the S&P 500. Okay, so if less people are moving out of their house and there's less people that can afford a house, there's less people shopping at Home Depot, probably less people shopping at Lowe's, less people buying TVs. So you got Best Buy taking the hit, you got Home Depot, you got Lowe's, and then we can just go on and on and on and down the line. And so for those reasons, I think short term, we take on some more pain. Long term, we got to do this so that we can go higher and get the economy reset back to an acceptable inflation number. So here's my thought process, and then we got to wrap this up. We go head over to PTU and talk about individual stocks that we can look at with the members. But here's what I'm trying to tell you guys. Member or not member, here's what I'm trying to tell you. I think the market goes lower short term, even if it goes higher slightly tomorrow. I think short to medium term, meaning over the next 3 months, I think the market continues a downward trajectory. I think sometime maybe second quarter 2023, we'll see. Or if it's 2024, it doesn't matter. I think we should be thinking about raising as much capital as we can to be prepared for possibly like similar to the pandemic rally that we had when they started pumping money into the economy. I think once they start cutting rates again and we kind of get this reset and people who get laid off from their jobs kind of filter into these other jobs that have job openings, I think what's going to happen is then we're going to see the bottom come in and then the markets are going to start to rally again as interest rates starts to come down. People who got laid off start getting jobs again. Then we'll be celebrating the job numbers like unemployment number just dropped, but we're about to artificially make the unemployment number spike. We need the unemployment number higher because we need people to lose their job, but we don't really need them to lose their job. We just need them to not be able to buy stuff, but not being able to buy stuff is by making them lose their job, but we're not going to actually make them use their job. We're just going to make the companies that pay them make less money, which means by default, they got to lay you off. So it's just kind of crazy how it all works if you really sink your teeth into what they have to do and the repercussions of the decisions that they have to make. Some of us, or some of y'all, I don't know, we all in this together. Some people gonna be a casualty of the war, but don't worry, baby. We go get through this because we can make money from stocks dropping, as well as we should be raising capital and be prepared for when the market turns and starts to go higher. I think we get a post-Fed interest rate rally. Is that what I would call it? I don't know what to call it, but I think the market eventually goes higher, but short term, yeah, we in for some pain, ladies and gentlemen. So let me know in the comments, are you prepared with put options if the market falls? And are you going to be ready in the next, 30, 60, 90 days? Most people be like, I'm going to wait to learn about the stock market later. This is the time to learn so that when we start to bounce and go higher, you'll be prepared. Account open, money funded. You know how to get in, how to get out as we start to ride the wave back up, instead of the wave is riding back up and you like, I got to learn that stock market stuff. All right. So let me know in the comments, you going to be prepared with puts or you going to be prepared by raising cash and getting the right education and getting the experience so you can be ready for the next wave. Let me know in the comments. I got to hop off and jump on with PTU. Those are my thoughts post-Fed announcement. And remember, you never go broke taking a profit. I'll see you guys on the next one.